Hi everyone. Welcome once again to Bright Hill Podcast. An happy New Year. I guess when you be listening to this episode, it will be in the course of the new year, right? With the new year, decided to make it a bit dynamic. Decided to put a new face as a guest. You know, we have Ejiro here. We've known him for 10 years now, 10 or 11 years now. An amazing guy. Uh, we both attended the same uni, and he's also a lawyer. He's going to be talking about something very interesting that I think is one of the things that has run in like intense conversation last year, and that's about the new tax law and things that surround it. So, I mean, Adrian, how you doing?
I'm good. Thank you for having me on this
And
podcast.
and you and I, did you guys plan the same, wallpaper? No.
Yeah.
I think that was I think that's entirely coincidental. I was surprised that you
Yeah. As a matter of fact, he came in late, so yeah. Okay. So first off, let's start from here, right? Idra has a new book out right now. On this. I've gone through it. Very, very insightful stuff. Even me as a lawyer, there are just stuff that I did not know that he kind of like broke down in this book. And I don't think the episode today can even cover up 100% everything that is going in the book. So if you have interest, comes with a fee. You know, we'll drop his details in the description below. You can reach out to him, or you can reach out to him even through us, right? Please just do it to. If you have question, I mean, some weeks back, someone reached out to me about it, like a lot of question about, you know, this tax thing. Imagine you now having a book that you can always make reference to and check and confirm these details. You can always check his book out. That's like your go-to. Or even if you can't, if you don't have time to read, you can listen to this episode. Yeah. So let's get back to Ejiro. Yeah. What's up? Um, let's start from this place, right? This is a very interesting conversation that even me myself I'm very interested in. Uh, what are the advantages, pros and cons of converting from business name to LLC? Because that conversation is generating like even stuff on Twitter and other social media platforms. What do you have to say about that?
But yes, thank you for having me on this podcast again. And it's actually a very serious matter in the sense that I've been seeing a lot of posts online, especially on Instagram. I think I was flagged. I made a comment on a particular post. The post had the CAC icon on it, and it said CAC like Instagram page sort of. And the lady in the post was talking about converting your business into an LLC for that this new tax is coming. It sounded so serious. There's the way they talk. That's what I call fear. What is called fear mongering, to make people to play on the emotions
sorry
of
by
people. Like
yeah, so by LLC you mean
limited
limited
liability company,
or
yes, limited liability company, private company. So I just saw it and I commented that this is so wrong. This is going to be wrong. You'll be converting for the wrong reasons. And then I was flagged. She commented that this is a scammer, but she took the post down. I was like, why did you take the post down? I've been seeing a lot of posts like that. The new tax law is coming. If you have a business name, go and convert it. So they use the word upgrade. That is the word that they actually use. And it's not really an upgrade per se, because people open business names and LLCs for different reasons. They each have their advantages. And as this question said, what is the advantage of a business name? What is the advantage of an LLC? So first of all, a business name, it has very low cost to register and maintain. There is minimal compliance obligations. Once your business name is registered, all you have to do is file your annual returns yearly. If you do not file your annual returns, you pay a penalty, but it's not going to cost as much. There is no requirement for a formal accounting standard, auditors. That, like I said, there's no annual CAC filings other than annual returns. The owner of the business has full control over the business. According to the new tax law right now, it doesn't have any exposure to company income tax or the development levy that has been added to. And this kind of business is suitable when your business is small, just starting, supermarkets, retail stores, small to medium trading business, and it is very convenient. People do underestimate how convenient having a business name is. You can wake up one morning and decide to change things. You can change the structure of your business and it's fine. With a company, you have to go and alter your articles and memorandum of association to reflect the fact that you are changing your subjects. So people do underestimate how convenient that is. The downside to it, though, because you want to be honest and open, the downside to it is that your business is the same as you. The business is not a separate legal entity from whoever owns the business. So, with regards to the new tax law, that means that person will fall under PIT, that is personal income tax. And the reason a lot of people are saying convert from a business name to an LLC, because under the new tax law, companies will not pay company income tax if they have a yearly annual turnover of 100 million or have net assets of 250 million downwards and below. That's 100 million and below, or 250 million assets and below. For those, just to explain a bit further, assets of a company and the things the company owns that help it do its business, basically its capital and all of that. So a company that will be for a company that does logistics, the assets will be their vehicles and all those other things. So yes, that's why they don't pay company income tax. And small businesses, they would not earn up to that amount. But to correct something, did I say 100 million? Sorry. Yes, it's 100 million. Yes. So they will not pay any company income tax, because for small businesses are not earning up to that amount. So if they convert, so the appeal is that if they convert from a business name to an LLC, they avoid paying any company income tax because they are not earning up to that amount. But what these people do not tell them is all those compliance that have to come with registering a company, all those other compliance. And if you are not ready, if you are not able to meet up with those compliances, you put yourself in extra trouble and have extra work. Imagine as a business owner, you have not really bothered with CAC. Every year you do your annual returns, and now with you register as a company, and every month you have to file your CIT with the Federal Inland Revenue Service or State Inland Revenue Service, depending on where your company is located. Every month, even if you made nothing, you have to file. And failure to file attracts a penalty. Under new tax law, the first month you don't file is 100,000 naira, and then because subsequent month is 75,000 naira. I had a client that didn't know about filing. Some people think that it's only when they make money that they are supposed to file. But the thing in filing simply is reporting to the government that this is my income, this is what I've made or what I have not made. That filing is important. So important that in places like the US, non-filing, not non-payment, not filing is a federal offense, can end you over 20 years in prison. You are for not reporting your taxes. That's what filing means. So the clients said they had not filed for over almost 15 months after incorporation, and found that he was owing 1.5 million naira. I was like, I've not made any money. What am I filing? I'm like, no, it's not by making money. Even if it's 0 naira that you have made, go and put it there that you have made 0 naira, so that at least you are seen. It's supposed to be transparency. And now business owners, they won't incentivize them of this, or incentivize them of this, they would give them a company, and the business now say, I'm only paying personal income tax, because you will still pay personal income tax whether you convert or not. That I'm not, my business is not paying tax, and then in like another 20 months they come and hit you with a fine of, and you'll be wondering where did it come from, because they are not giving them all of this information. They are working, playing on their emotions to come to register, convert from a business or to an LLC. So those are the things, those are the issues. So an advantage, none of them have advantage over the other. An LLC, the advantage is good for, you can, there are some loans and grants you cannot access without having a corporate entity. There are some businesses that won't work with you if you are not having, if you don't have an LLC. And then there's a level your business will expand to. It is advisable you have an LLC, because you are now opening branches in different places. Because one main advantage is that an LLC is a different entity from you. Now, I use this example very much for non-lawyers, in the sense that if you have a business worth 250 million naira, and for some reason your company now is registered as a company, and that company goes into problems and finally going down under, and as long as there is no fraud, there will be no lifting the veil, as we know that. So the company will only be, and the company is worth 250 million naira, but the company is in debt of 500 million. Now, after all is said and done, creditors and everything said, they can only come for that company with, to the tune of the 250 million that it's already worth of, if, despite the fact that it's owing 500 million. That's if there is no fraudulent activity. Meanwhile, you as the owner might have properties worth 1 billion, but it cannot touch you because your company is separate from you. As long as, like I said, there's no criminal activity, there's no fraud, which will require the courts to lift the veil and come after you personally. It will just stop at your company. And your company, it only has 250 million naira that it can use to settle its debt. It's owing 500 million naira. The court will collect all the 250 million naira. Your company will declare bankruptcy. Everybody will go their way. You cannot pay what you don't have. But you, that you are the owner, you have assets worth in the billions, but they can't touch you because the company is not you. But if you are a business name and your business goes into any sort of problems, after they are finished touching the business and all its assets, they'll begin to come after your own personal asset, because you and the business are seen as one. So that's a major advantage a company will have over a business team. You are able to protect your assets and things. And a business team, a company is actually good, but you have to get to a certain point in your business to be able to think about getting that company status. Because if you are not able to pay the compliance fees and follow certain protocols that a company has to follow, that a business team does not have to worry about, you would find yourself in more issues and problems. So there's no advantage over or over both of them. Each of them are
I think,
distinct and individual.
thank you for that. Really, for expanding on that quite a lot. I think most Nigerians don't even know all these things, and the nuances of having a company, having a business
Yes,
name.
they don't.
Some people just open it and they write CEO in their bio. They just want to be CEO, and they don't understand that there are nuances to and differences between this and this. I mean, I saw the other day, company was already in debt, was already she had not filed annual returns since 2005, that she has opened that company since 2005. So just imagine now having to do annual returns from 2005 to 2025. That is a lot. That's 20 years. So just imagine now doing that with tax. And this is a new regime. Most Nigerians, I mean, I've seen other people too, when they register the company, they don't even remember they have to file annual returns. And some of these agents I help them are not making things, they're not helping matters as well. So they just do that and they leave it to God. And then, so this 2026 definitely be different. So if you're listening to this, you have a company, you've not filed annual returns, just know that there is something else again that you have to start filing and start um, showing that your business is up to date in regards to tax compliance.
Thank you very much, guys. Yeah, I mean, I'm tempted to just take the back seat here and just, you know, have both of you get this conversation going. Uh, yeah, but that will lead me to this question, right? There's always confusion between what is levy and what is tax. Uh, there's this thing about 4% levy. Ejiro, like just break it down. I want to ask like the um like just a regular person that doesn't know much about this tax thing, and that's how I want to ask these questions. Yeah. So yeah.
All right. People should not be confused when they use levy and tax. Most times they are referring to the same thing, but they are just fees you have to pay. Different fees now. For example, but development levy will fall under for we come to companies or businesses per se. No, yes, companies that are registered. These are the companies that are supposed to um or the taxes that a company is supposed to pay basically. Now we have they divided into two basically. We have small company, we have large company. Those are just the two categories of company. Now a small company is any company that's the turnover is 100 million naira or less, or it has assets of 250 million naira or less. Now, under this new tax law, those small companies are fully exempted from paying company income tax. And then we have large companies. Large companies are companies that the turnover is above 100 billion naira. Their company income tax at a flat rate of 30%. So if you make 100 million naira and above, 101 million naira now, which is above, you have 30% of that, which would be 30.1 million, will be that's your tax rates. I'm not a maths person, but I use that because that is easy to understand. Most of us we study this law so that we can run away from maths. But apparently, our Nigerian government said no. Now we are calculating tax. But yes, so that's the standard rate. It cannot be reduced. But I believe that there's an incentive, or there's a note that it can be dropped to 25% by future presidential order. But right now it's at 30%. And then we have the development levy. Now, all companies except small companies, we pay 4% development levy. Now, I haven't really gotten into the nitty gritty of what that development levy is, but it's a tax and it's 4%. And now, how it is broken down, it is, of course, that's another topic discussion, but it will be there in my material but one thing people should note is that it's not from the entire money you are being taxed. I need to make this distinction. You are being taxed from the net profits. So if you make 100 million naira for your business or your company, or even your personal income, no, let's remove personal income, your business and your company, and then out of that, you are going to minus your expenses. That's the money you use to run the business. So out of that 100 million, let's say that the expenses are now give or take what you spent that entire year with what you used to, you paid your salary, you bought things, you upgraded equipment, anything you did that was for the furtherance of your business, you minus it from that 100 million naira. It comes down to, I think you used 25 million or 30 million. So you have 70 million naira left. That is your profits. That is what will be taxed on. And then you have capital gains tax is also there. Now, a company cannot be started without capital. So everything that you use to run your business is capital. I use a logistics company because it's very easy. A logistics company has cars, bikes, things that help it run its business, planes even. Like DHL now is a logistics company and they have planes. So those planes and vehicles are its capital. Now, if DHL sells one of its planes for 30 million naira, and then so it has sold that plane for 30 million naira, it will pay capital gains tax on that 30 million naira. And capital gains tax is at a standard rate of 10%. So those are different taxes that companies have to pay. For with regards to personal income tax, of course, some people are under payee. That means your company is already paying tax. There's also companies that have staffs that put them under payee. That is pay as you earn. Your tax has already been paid before it even got to you. If you check, there is what we call net income and then gross income. Gross income will be your total income regardless of tax. Net income is after tax has been paid, what comes to you. So there are places where you see that you are earning 150,000 is entering your account every month. That's your net income for the monthly net income. But if you check it, when they remove your tax, your pension, your health, and all of those things, you find that you're actually making over 200,000, but they are removing all of those things. That's under payee and under healthcare system and all of that. So people should note that there's that difference. Now you're making personal income. You are not. You don't have a business. You are working. You are going to pay personal income (PIT), and it is in different stages now. And people earning minimum wage are exempted from tax. If your earnings is 800,000 naira and below, you are exempted from tax. And then if you now move upwards, you now begin to earn 801,000 naira to 3 million naira, you are going to pay 15% tax. And then from 3 million and one,
This money is
because
per
it's,
year, right? Or monthly?
yes, yeah,
Oh,
it's
yeah.
yearly.
Oh, okay.
Yes. So that is your annual tax. So from 3 million and one to 12 million, it will be 18% tax. Then from 12 million and one to 25 million is 21% tax. Then from 25 million and one to 50 million, 23% tax. And then 50 million, above 50 million is 25% tax. That's the highest for personal income tax. And then under personal income tax, you have certain reliefs. You have rent reliefs to the tune of 500,000 naira. So there are reliefs or deductibles, as we might call them. So you can actually request for that. That is what we call rent reliefs. Then pension contributions are full tax deductible. Health insurance too are full tax deductible. Loss of employment, that is compensation for job loss, is tax exempt up to 50 million naira. And then, of course, I mentioned business expenses, wholly, exclusively, reasonably, or any business expenses cured by your company or your business is not taxable. You are only taxed on profits. So people should know this. And what people should actually do this year is that always now you'll be very, very deliberate in keeping your books and your records. One thing I tell business owners also, especially now that you don't have to convert to a company, quite all right, since the business owner and the business are one and the same, there will be the owner is charged personal income tax because the money from the business is seen as the owner's money. So if the owner has books to show that these are actually business expenses and this is the net profit, the owner will be taxed only on the net profits. But any discrepancy in your books, the tax people, they like those discrepancies because they will follow it up. As long as your money cannot be explained, you can't explain what this money was used for. They will join the profits and it will be added, and the tax will be added on it. And somebody said something that I actually took. So I said that this year people will know why it is important to leave narrations on any transfer that you are making. And I took that part. When you are making, there's a reason they have a lot of us, even I myself, do not pay attention to narrations when we are making bank transfers. But now, especially if you are a business owner, make sure that the narration is there so that when you pull up your account statements for the tax people, for the tax authorities, it is there. You have a poultry farm and you bought battery cages or you bought feeders, it should be there. When you transfer the money, feeders, somebody is making payments to you, tell them, let it be known that this is why you are making this money. They bought your, as I said, poultry farm, you sold 20 kg of chicken or meat. Let the person put it in his transaction, chicken 20 kg, and send it. Those narrations are going to be very important for next year so that there are no discrepancies. Discrepancies favor the tax authorities, not you. Any money that cannot be explained favor the tax authorities. They don't favor you. So these are the different tax for the different people and companies and how it will be implemented.
Yeah, there's no how we will not, invite you back. We have to get a second episode going. There are still stuff to talk about. When I was preparing this particular question, I want to ask next. I wanted to put one or two English together and bamboozle, use one or two English. But see, I'm like, I have the question here, in but I'm going to ask this question in a very simple way, right? Um, how can you kind of relieve yourself from these taxes? Because these are questions that, see, whether I like it or not, that's one question that people are really interested in. How can relieve yourself? Imagine you having multiple businesses or companies, taxing this one, taxing the other, your personal income tax is there, the VAT, still, is worrying. So what can an individual do, or what can a business do, to mitigate this thing?
This is this is
Let me add this, right?
Yeah.
Genuinely, I mean, Nigeria, we don't have that culture. First off, it's very hard for people to learn that, you know, and people also like to carry out actions that are within the law. So, what do you advise, really?
All right. I believe since you have said that you invite me back for a second episode, this might be where I might go into it fully because, like I said, like you have noted, we don't have that culture, and I will not be able to use what like one of the things I've been focusing on really is wealthy people, and I know that especially in the US and other countries, those
Yeah,
people have their legal loopholes that you can use you don't where it is not illegal. For example, now one of the things that people were mentioning was the fact that in order to pay company tax on your business, that one of the loopholes that were telling people, even though they were doing it wrongly and not giving them the full information, was converting your business into an LLC. That seems like a loophole in a way.
very
But
basic,
yes,
right?
yeah, yes, very, very basic, but they didn't tell them the other things. Now, what I would say generally is that on paper, the people that have studied, wealthy people, per se, quote and unquote, they actually do these things. On paper, they don't own anything. That's the simplicity of that answer. Somebody like Elon Musk now, he's seen as the richest man in the world, worth over 200 billion, with a trajectory of getting to $1 trillion very, 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 very soon. Up power to him. But on paper, he doesn't have anything. A lot of people are very, very upset at rich people. Why can't you give money to this? And I said that because they don't have liquid cash. Their net worth is tied to assets, and these are assets that are not taxable. We don't have a wealthy man in the US makes 50 million dollars, tells his friend to draw an art piece. Just come up with they draws an art piece, tells another of his friends because they all know each other, evaluate this art piece for me. The man evaluates the art piece for him as $50 million, the exact amount he just made. He donates that art piece to a museum worth $50 million. Suddenly that $50 million is not taxable. There are ways around, but in Nigeria, it's something that we really have to look forward to. In fact, for some reason now, I just got into stocks and I'm trying to build a stock portfolio. Elon Musk has stocks in Tesla, his company, stocks worth billions and billions and billions of dollars. but he can only be taxed if he sells those stocks. Once he sells them, he will be charged. He will charge capital gains tax, and the money that enters in his accounts will be charged under his personal income tax. But guess what Elon Musk does? He doesn't sell his stocks. If he wants, if he has stocks worth give or take $50 million, he needs $10 million to do something. He walks into any bank. I need a loan of $10 million, and I want to use it to do this. I have stocks worth $30 million. Use it as collateral. He gives them the share certificates, and
If I
then to protect
remember,
themselves, yes, they have
if I
a
remember
clause that
correctly,
if the stocks drop below a certain amount, they can sell it. The triggers the clause to sell it to protect and retrieve their money at least. And then that money
mm,
has come to Elon Musk as a loan, not income. And a loan cannot be taxed.
if I remember
So you see what
correctly, I think that is how he bought Twitter. He approached JP Morgan for the cash and used his Tesla stocks as collateral, and he provided the
exactly.
$445 billion in which they paid Twitter and used his stocks as collateral. And then he started to sell off Twitter features like the blue mark, like ads and everything. So he was making his money off Twitter, using it to settle back his debts. They will do that for a number of years. And then when he's done paying back his debt with whatever interest that it's in, he gets to keep control of Twitter and also to keep control of his stocks. So that way he
And
didn't
the
have
stocks
to
would have gone up also. So he
have
has
also
made
gone up.
money even though he was in
Exactly.
loan.
So he can even decide if he wants, they can even decide to sell off some of Twitter stocks too as well to some other shareholders so that he can make a little bit of cash on the side for the company. And that's how he didn't have to withdraw one kobo from his own account. He had to get financing to do it. So I think that's why I think Donald Trump also casted that system, because then in the 2016 election, while him and Clinton were debating, and Clinton was like,
Yes.
he 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 doesn't pay his taxes, he likes to evade. And then Donald Trump said something. I think that was even what turned the election around. It was like, do you know how I know? Do you know that it's not just me that does this? It's also her friends as well. People sponsoring her, they do it. So this is what we do. And he just casted the whole idea right there and then. And that just made everybody okay. So this is how it actually works. This is how rich people do it. And I mean, it's not illegal. And I think another one they do, which I read in Robert Kiyosaki's book, is that once you have an asset, it could be stocks, it could be any one of these things. So you have an asset and you wish to liquidate, but you do not want to liquidate so that you don't get to pay capital gains tax. You swap the assets with another one of your friends who has a different kind of asset, maybe in housing, maybe in another form of stock or in another form of investment. You swap it so that it's like an asset swap. So instead of paying to give it, maybe paying to another person, you just swap it to another person whose asset base is maybe more liquid or pays dividend in a more liquid form.
So yes, that's actually
Yeah.
these are actually things, and they don't teach any of these things in school. One thing you have to just, but one thing I would like people to note right now is that these are people that are in the US and function under a very different set of laws. This Nigerian tax law is still in the works, it's still developing. As much as it has come into force, there are still things you still need to study it. And a loophole that I have thought about, I myself, for companies to not pay company income tax, because imagine it's 100 million naira that you get to before you begin to pay tax. So that rather than having a big company that is earning billions and billions of naira that you pay tax on, why don't you have several small companies that are not making up to the threshold? All of them together are making the big one. They are all doing the same. All of them together are making the big bank, but individually they are not making enough to get tax. But that also involves a lot of compliance and setting up different companies and corporations. But that is also like a decent loophole if one looks at it. Imagine you have a company that you want to make a billion naira in turnover and profits and all of that. you know that you will get taxed quite all right. So you, instead of having one company doing that, you have 10 smaller companies, each keeping their profits and money below the threshold of 100 million naira year annually, but they are all
Mm.
under you. So that's like a loophole. If one has the ability to do that also, that is good. For personal income tax, there are really no loopholes you want to use really that I've seen so far, because it's entering your accounts. It's not business. You cannot say I want to earn less than what I'm earning right now. So, but I know that there are legalities around this that one has to put into
Consideration.
with consideration. But we don't want to
Yeah.
give all of this away, because
I
if we
mean,
give all of this away to you people, you will not come to us. We will not have clients again. You will
what value will be left? What value will be
go-
left? And
exactly.
that's what I, even at the start of this episode, that's what I said, right? That uh, I mean, in fact, looking at it, this might be one of the longest episode we would have. It still doesn't cover all. The best thing is just that get his book, right, and you can also reach out to him for questions. We're going to drop his number and email in the description. Yeah, and we might have to actually call you back again for another episode, just sincerely, maybe especially when the year starts proper, and there are new development or changes, to give updates from time to time. But thank you very much for your time. Very insightful. You've even done beyond what I even expected. And yeah, I think Isaac is uh Isaac is taking it now.
Thank you so much. It
So
was
yeah,
really
Isaac also had,
Yeah.
yeah, great addition to from Isaac
Hmm?
too. Yeah, so we'll wrap it up here and we'll call it a day. And see you next time. See you on next episode. Thank you very
Yeah.
much.
All right. Thank you.